Okay, welcome back to QuickBooks. We are now diving into a new chapter. So, everything that we learned up, they kind of are relevant because with inventory plays a huge role because not only is it the main primary, core of your business, but it affects both the expense side slash bills, and it also affects the sales receipts as well, and the sales process, right? We're ultimately going to be creating items, and we all know what items are, right? They're essentially meant for when you sell a product or a service, right? But it's also used for in case we do make purchases of inventory, right? It allows us to make those purchases and record them as we go so then we have it readily available to use in our sales receipts. So you can say the you can say that, and we'll talk about what this means when we dive into chapter 9, which is tomorrow. You can say that an inventory item is a two-sided item. It allows you to create it as an expense, but it also allows you to create it as a revenue as well. All right, and that's when we talk about, when we purchase inventory, right? What does it become? It becomes an asset, but also you are creating a bill, right? You're not going to pay the vendor right away, or you could, but essentially, and then at the end of the day, you end up taking that item and you're going to also apply it for income. You can use that item to sell off your stuff. So that's pretty much the gist of chapter 8 is inventory. Okay, now of course with the topics that we're going to be learning, there are a few things I have to take you back to because this is accounting 101 and it should be something that you should know in the back of your head, especially if you are the one that's going to be dealing with the inventory. Okay, so first things first is going to be talking about how to track inventory. So there are two things that we learned, right? We learned what an inventory part is and a non-inventory part. So when we're creating those kind of ideas or those items, right, we essentially know at least some context behind it, right? You would generally create an inventory part item if it's something that you sell a lot of or sell often of. Where an inventory non-part, you don't really care to keep track of it or you don't sell it as often as you'd like. So that's the real main difference between an inventory part and a non-inventory part. Okay? So again, inventory parts is going to be your daily things that you sell almost every day, where some things you don't sell often are going to be your non-inventory part. So in this case, when we look at our example in Academy Photography, we're going to be creating an inventory part item, right? We're going to be creating picture frames because we sell that on the daily. Where something like a custom camera, that's not something you have laying in your inventory and you have it readily available. That's something that you're going to, maybe, purchase it so that you have it on display. And then when one day your customer decides, hey, I want to buy a camera, well, there you have it, right? But it's not something that you sell every day. You're more likely to sell picture frames a lot more, especially if your services is we take photos and we do photo sessions, and the whole purpose of that is to take photos and you get to take one home, right? So you're more likely to sell your picture frames way more than you would sell a camera. Okay, so that's the idea there. Okay, it's something that you don't sell often and you don't really care to keep track of it as often as you like, or it's just something you just don't sell. Okay, so that's the difference between an inventory part and a non-inventory part. All right, now we're going to also go ahead and take a look at the actual difference between perpetual and periodic inventory. So this concept here, right, when we understand keeping track of our inventory, there are two methods that we use that exist in business in general, okay? And the tracking methods are periodic and perpetual. If you actually just look at the straight definition between periodic and perpetual, right? Periodic means every once in a while, periodically. You check it every once in a while. Where perpetual, right? It means you keep going. It's constantly. You constantly check up or you constantly update your inventory. So that applies here as well. Okay. And by default, QuickBooks actually uses the perpetual system. The perpetual system here is that every time we make a purchase, you're updating inventory. Every time you make a sale, you're updating the inventory. So that's the concept here as well. Every time we make a purchase order, we're receiving inventory. And every time we do a sales receipt, it's going to record and take away that we made a sale. And now my inventory is going to be updated at all times. All right. We're periodic, right? Again, it's because the items that we don't sell very often, we don't really care to keep track of it. All right. So that's the same thing here. We only update the inventory maybe every, once in a while because it's an item that we don't necessarily sell all the time. So if I buy 5 cameras, right? If I haven't sold a camera in over 5 months, I can assume, right, that even if I go take a physical account, it should be 5, right? So in this case, that's the difference between perpetual and periodic, is that one of them is you check it every once in a while, and the other one, you're constantly updating the inventory at all times. All right. And by default, QuickBooks is going to use the perpetual system because of the vast majority of using the purchase orders, using the sales receipts, invoices, whatever it is. So it's keeping track of the perpetual inventory behind the scenes. Okay. So that's definitely something that you want to understand as well, is that there's a difference between periodic and perpetual inventory. All right. So again, let's take a look at, let's go ahead and take a look at this little thing right here. Let me see. So now that we talked about tracking methods, we're going to go ahead and skip along and actually, how do you activate inventory? Pretty straightforward. We talked about this since chapter 12 and chapter 7 as well. Especially when you answer that question, right? Do you keep track of inventory, or do you have inventory? And in this case, if you go to the edits, right, preferences, right now my inventory is on. If I go to my edit preferences and I go ahead and select my inventory and items, or items and inventory, and I go to my company preferences, the first thing that's checked marked is to activate inventory. All right, to keep track of inventory and purchases of inventory. Okay, and because it's selected and it is there, my inventory is already selected. But let's just say I don't sell it. I don't use inventory. If I uncheck mark that and I click OK and I click OK, notice this. If I pop open my home page once again, my whole entire inventory section is gone. It doesn't exist because I don't use inventory, right? I just only buy things as an expenses or whatever it is that you keep track of your inventory. But again, if you are a merchandising type of activity for a business, you are more likely to have some form of inventory, right? If it's just if you're just a pure service based company that doesn't sell any products, then of course you wouldn't have inventory at all. unless you choose to use it as part of your service. It's products that you use in order to create the service. Then yes, you may do so as well. But for most cases, most service companies will not have or they're not required to have an inventory at all. Okay, so I'm going to go back and reactivate that. So again, home page, because we do need to use it for keeping track of our purchases, but also to keep track of our sales as well. So I'm going to go ahead and make sure that it is active. And now I'm going to go back to my home page to ensure that my train of my, little diagram is there. Okay. So speaking of that, now I'm going to actually talk to you about the train of events, or in this case, the workflow. So as you can see, if you potentially are using inventory, there are actually two ways that you can actually make purchases of inventory, right? You can go ahead and, purchase it from a store and write a check to them, which we'll talk about. Or you can go ahead and use this little system right here. If you create a purchase order, right, the next step is receiving the items. The next step is you're going to, enter a bill, and then you're going to pay the bill afterwards. So they do recommend for QuickBooks that if you are planning to purchase inventory, the best way to keep track of it without having to, manually enter it in is by using this purchase orders flow of transaction. Okay, that's the best way to do it because again, it transfers and it also updates your inventory instantly, instead of having to go there manually, because we will talk about what happens when you take a physical count or something happened to the market, that you have to manually adjust your inventory. And that can be one of those issues where if you purchase your inventory items through a vendor, right, and you go to their store or whatever it is, and you have to manually enter it in, that's one of the problems that comes here. So they do recommend you, if you do plan to do that, use the purchase orders, because it makes it transfer inventory very, very easily. Okay, so that is what this little workflow is. Now, here's another thing I also need to tell you. According to QuickBooks 2019, they got rid of the inventory center. How awesome is that? So, but good news for you to have the 2018, you still have your inventory center. So again, the inventory center should look, I think it's above here or something like that. It looks just like your other centers. It looks like your, customer center. It's got the list of all the items and what their price values are and the description of what they are. Okay, and what purchase orders you've made and what sales that you've made as well. So let me find it real quick. The inventory center. There is a screenshot in your book somewhere. Yes, I cannot find it. Oh, no, that's not it. But when we come across the book and then find it, I'll show you just a quick overview of what it should like. But you have it on yours because you downloaded the 2018 version. So you should be able to access the inventory center. It should be on your home page under company. Yes. Okay. And yours is actually going to be, inventory center. Mine is just inventory manage or inventory. Yeah.
Ours goes company, home, select inventory activities, then choose inventory center.
Yes, so you have the inventory center. I do not, because apparently, so this is what happened. Because everything you can do in the inventory center, you can just find it in your items list. Okay, that's essentially the same thing as your inventory center. The only difference is that you do have to, in order for you to keep track of your transactions, right? Which is a brief little segment there, you can do a transaction journal. And that's going to give you a list of all the transactions that happened using that item. But again, you're able to do that as the same way as if you go to your items list, right? If you want to run a report, you can say, for example, I want to run a report on this. I run the report and it will give me a list of all the transactions that has happened using that item. So there's again, the inventory center isn't actually necessary when it comes to 2019, okay? Because you can do everything you can using the items list itself. All right, so that's one feature that I need to make sure that you understand the difference for. And you are being tested on the inventory, the 2018. So you must know the inventory center on your end. Okay. So here I am on this page here. So what we're going to do is we're actually going to start creating our inventory parts. So first thing is we've taken a look at this before. Okay, how to create a new item. Okay, so I think this is your inventory center right here. Okay, so you have your list of your items here. You have a little screenshot of what the item is, and then below you have the transaction. So similar to any other center. Okay, so there are a couple ways that you can go around it. So entering a new item. Okay, and we talked very briefly in this in chapter 7 when we created new items, right? You can either create the items by going to items and services. And once you get to your items list, you can create your new item there. Okay. You can also right click on your item list and be able to create your new item there as well. You can also go through the list menu to get to the item list the same way too. And then the last one I told you about, if you briefly remember this, if you go to the vendors section, you do have a little inventory activities and you'd be able to create the new item there. Okay. So that's the one I was talking to you about when we learn in chapter 8, when we dive into inventory, is you will have a small section for the inventory section. And you can create items that way too, right? But since I'm already in my little window here in my items list, I'm going to go ahead and click on the new items or items list, and I'm going to go ahead and click new. Okay. So in this case, we are creating a inventory part. So for this case, we are creating an inventory part, and what we're creating is going to be frame 5x7 wood picture frame, right? Okay, and then the description below, it's pretty straightforward. Wooden 5x7 5x7 wooden picture frame. Okay, and then now we've done that part. It's not a sub item because if it were, so the main one would be wood, right? If you want to create a sub item below it, it could be oak wood, it could be redwood, it could be any other wood that you can think of, any wood finishes. That's actually going to be considered a sub item because you're breaking down the wooden frame, right? And you're breaking it down based on what finish it has. So in this case, it's more of a main account, right? It's a main item. So it's going to be just the wooden frame, okay? So the first thing you're going to be taking a look at is the cost of goods sold. It's right below it. Cost of goods sold. So how much does it cost you to buy one picture frame? In this case, it is only $5. All right. And it's going to be selected as cost of goods sold. It's already been highlighted for me that it's going to be indicated as a cost of goods sold. So every time I purchase my item, it's going to cost me $5, right? And every time I sell the item, it's going to cost me $5. So in this case, when we understand how the flow of a transaction works is when we're making purchases of inventory, right? We're calculating that, oh, it cost me $5 to purchase them, right? But when we sell it, we're selling it at a higher price. So how we conduct this transaction is when we sell it, we're considering how much it costs me to sell the item, but also what is my profit margin that I'm trying to earn based off of this. I never want to break even. I always want to make more than what I paid for. So that's essentially going to be assumption here that we are going to, that it's going to cost me $5 to purchase it, but also to sell the item. All right. And of course, you can have a preferred vendor. It's not necessary, like if you get other items from other vendors, you don't need to place this here. But in this case, my book says that it is Ace Supply. I'm buying all of my picture frames from Ace Supply. Okay. Now, then I'm going to go ahead and go on to the right side. Now it's going to tell me how much do I plan to sell this item for. I'm going to sell it for $9.99. So I'm actually getting close to a 95% profit, right? It's not 100% because I'm not doing $10. It's about 98% profit margin here. So of course, because I'm selling a product, right, I choose that the price I'm going to sell it for is $9.99. All right. And of course, because I'm selling a product, and this is assuming that this is for my store locations, I'm going to charge tax. I have to. Okay. And then now your account that you're going to be associating your sales with, or your revenues with, is going to be sales. Okay, because this is a direct correlation that we are attempting to make a sale of an item. All right. Now the next bottom part right here is going to be, where are you going to be placing these items when you purchase them? Straightforward. You're placing them as an inventory asset. All right. As in, when you purchase them, they're going to go directly to your inventory asset. When you sell them, right, you're going to sell them at the selling price, and it's going to cost you $5 to either purchase or to sell. Okay, so this part's a little confusing, especially if you don't understand how sales works. So when you sell an item, you want to make sure that you calculate your expense that it costs you to in order to sell the item. So that's why it's broken down, it's split into two. You have the cost of goods sold, what you paid to purchase the item, and then you're also combining how much you actually are selling it for, which includes the profit percentage. All right, and of course, it's gonna go directly into inventory every time we make a purchase, and every time we sell an item, it's gonna come right directly out of my inventory. Okay. So now that we have that section filled out, now the next section is going to be, when do you want to have a reorder point? So reorder point here is basically, when do you want QuickBooks to give you a reminder to make a purchase of inventory? All right. In this case, I want to make sure that if my inventory falls either below 20 items, I want QuickBooks to remind me to go ahead and make another purchase. Okay. So that's very important. Okay. You have the minimum is that the lowest point that you want to have in your inventory on hand is, I don't want it to fall below 20. And if it does, I'm going to get I can set a reminder to remind me to purchase more inventory. Okay. So this is where the on hand, the total value, and the as of is going to come into play if you are manually punching in or manually adding these items into QuickBooks. So again, this is for pre-existing, but most cases you can do this part, and we'll talk about it in a few sections below. What happens when we need to adjust our inventory? And that's where you can do that as well. So for this case, because it's a brand new item, I've just created this item, I've never made a purchase before, I'm going to go ahead and leave them at 0. Okay, and as of today's date, all right? But in this case, I have to reflect this back into the past. So I need to write it as of January, there you are, January 1st of 2019. Okay, just so that when we enter in everything else, it will change this. Okay. So now that we finally created an item, right? This is called a two-sided item because it's associating our expenses and it's associating our revenues as well. All right? So when I say it's a two-sided, right? We'll take a look at this tomorrow. You can use this for both as an expense and as an income account. In this case, it's a triple threat because it also involves your asset as well. So once I have that item, I'm going to go ahead and click OK. I'm going to go ahead and click OK. There you go. So now you notice this. I have a frame 5x7 metal, and now I have a frame 5x7 wooden. Okay?
Oh, okay. Let's see that.
Yes. So now I just created another item for there just to show that there are multiple items that you can sell. Okay. So now that I have that, I do want to show you this little side note here is they say that go ahead and create an invoice. All right. And when we create invoices, right, this is how we use the items that we create and apply them using the sales process. So here we sold to Mr. Jerry Perez. Okay, is he in here? I don't think so, so we may have to quick add him. Jerry, oh, there he is, Perez Jerry. Okay, he's going to be Walnut Creek, and I believe I think he purchased this back in February of 2019. So let me go ahead and get there. So February 2019, I believe he bought it on the 7th. Okay. Your reference number or your invoice number, whatever it is whatever number you've already associated it with. So in this case, it's 2019-106. So we've already created a thing for that. If there was a purchase order involved, as in we made a purchase for him, particularly for this item, then you can go ahead and put the purchase number, order number there. Or in this case, you could put your estimate number. But in this case, I don't have one, so I'm going to go ahead and skip that for now. And of course, you have your net 30, Katie Reynolds as your representative, and you have the due date on there. So of course, now I'm going to go ahead and place in my quantity. So in this case, I believe we are saying that he purchased 2 of the 5x7. Yes, he purchased 2. Okay, and then this is where we can place our items because we created the items from previously, right? I'm going to go ahead and write 5x7, right? And then let's see what pops up. So I can choose either metal or wood. I just created wood, so I for surely don't have any items in there. But I do have some in my metal. I'm going to say that I purchased 2. And notice this. I'm going to have, or my selling price for my metal is going to be for the $5.99, and it is 2 of them, and I am going to be taxed for it. Okay, so because tax is going to be 99 cents, therefore, Mr. Jerry Perez owes me $12.97. Okay, so notice this. Because we filled out that information, right? We filled out the item is I want to sell it for $5.99. There it is. And that it is a taxable item. So therefore, tax is included. All right? And of course, that's how you use it for on a sales receipt. This is us generating income. All right? And I'm going to go ahead and say thank you for your business. Okay? And I'm also going to say sold two 5x7 metal picture frames. Okay. And then I'm going to go ahead and click save and close. All right. So now that I've done that particular part, right, let's go ahead and check out. So I just showed you how to use the item that we created and use it for a sales receipt or an invoice. All right. So now the next thing I'm going to show you is how we use it to make purchases of our inventory. But before that, I want to know how much I have on hand. So, of course, this is going to be dealing with your reports. Okay, I'm going to go ahead and go down to inventory. And let's go ahead and look at inventory stock status by item. So if I go ahead and do that, notice this. It tells me that for my camera SR32, I currently have 0 on hand. Okay, and then same thing with my cases. I have 24 cases on hand. My picture frames, for my metal picture frames, I have 20 on hand. And here, for my wooden frames, I have 0. Okay, and notice this, there's little checkpoints right there saying we need to reorder. We need to make an order. Okay. Yes. So again, this is how you check how many items you have on hand at any time. So it's going to be your inventory stock status. Now, let's make sure we memorize this, okay? So I have 20 metal and I have 20 I have 20 metal and I have 0 wooden and I have 0 cameras. Okay? Now it's going to be important because I'm going to show you the stock status right after we make our purchase order. Okay. So that's how you tell how much items you have on hand. With your inventory center, you'll be able to click on the inventory center and you would know how many items you have on hand. Well, in this case, I believe it's not. It shows you how much you have on hand, and it shows you the value of it as well. Okay.
How'd you get to that again? I'm sorry, I'm missing something.
What do you mean? Which one?
Where you went to the inventory stock status.
Okay, so you're going to go to reports.
Yeah.
Okay. Under reports is going to be inventory. And then inventory stock status. Well, I chose stock status by item. Okay. And that gives you a rundown of quantity because it's stock status. Quantity per each item. Okay. So that's understanding how we utilize the inventory and how to figure out what we have at any given time. And I wanted you to see this because it's so important that you know this. Okay? Knowing how much inventory you have on hand. All right? Now, because we actually started using the inventory item, right, and we sold something, there's also a little concept that you need to know when it comes to understanding what happens when you sell your items, okay? So that's going to be the next section here is when you sell your items, how is it costing, all right? Now this is a little in depth into accounting 101, but if you go ahead and read this little graph down below, actually not this one, there's one more. Okay, well anyways, when you read this graph down below, it pretty much explains how the average costing method works. Okay, so but in this case, when we actually get to take a look at accounting, we learn beyond than just average costing. We learn the first in, first out rule, right? Or the last in, first out rule. If you've ever heard of this before, right? The idea is that for FIFO, especially if you're making purchases of inventory, right? If you're going to do FIFO, treat it like you're a grocery store. If you're going to be making purchases of milk, you always want to get rid of your first batch because it will expire. So think of it that way. You want to get rid of the first items that you purchase first and then slowly trickle down releasing out your newer products. Okay? So that's the idea there. If you do LIFO is more like it doesn't really matter when you purchase it, but again, the example I use for LIFO is that, for example, Apple, right? They sell iPhones, right? The one that's most likely to be released newest, right? So we have the new iPhone 12 right now. That right now, okay, compared to all the other models, right? That one is most likely going to be selling out first compared to your iPhone 10s and your iPhone 11s, right? So that's the idea for LIFO here, is that because we released a new model and a new product, you're more likely to sell that item first versus your previously old items. Okay? So in terms of batches, that's the idea, that you're more likely to sell the newer one first versus the older ones. And then average costing, or in this case, average costing, where we don't care what the product is. And because we're making so many purchases of it, right? We want to spread the cost out evenly through every single item that we have. Hence the word average, right? So that is what QuickBooks does in this particular thing. Every time we sell an item, if it costs me $5, right? That $5 may be for that one product. What if I make another purchase and it became $5.06? Or if I purchase another batch and it became $5.10, right? That's the one thing that we have to deal with when it comes to reality, is that when it becomes supply and demand, right? Hence a little economics in here as well. We have to assume that as we go through on the years and the products are being produced, raw materials become more scarce. And with supply and demand, right? The idea that the price can fluctuate due to those kind of factors, right? Shortage of raw materials, right? That's definitely going to make the cost a lot higher. So for those kind of instances, this is why when we sell our items, we have to find some kind of midpoint for us to measure how much profit we're actually getting and how much we're actually expensing in our company in order to sell a product. So in this case, when we understand that concept, right, then we understand that every time we sell a product, we have to calculate it based on how much it costs us to sell the item. And in this case, QuickBooks, Pro, Premier, and Accountant, those three are going to be defaulted and can only do one type of costing, and that's going to be average costing. Okay? The bigger programs such as Enterprise Solution, they can go beyond and be able to do more than average costing. They can do FIFO, they can do LIFO, they could do other ones, like I've never heard of inventory valuation before. Never heard of that one before. Or looking at other ones, like some of the years. Actually, that's depreciation, sir. But like they have other forms that I've never heard of before, but only Enterprise Solution has the capacity to be able to do that. All right, so right here they could do the first in, first out method for calculating inventory. Okay, they can do beyond than just average costing. Only Pro Premier and Accountant can only do average costing. Okay, so if you really want to understand this, you can also research it. Go ahead and go on Google and type in inventory costing methods, and then you would be able to see the difference between LIFO, FIFO, and average. Those are the three most commonly used ones. Like I gave you an example, right? FIFO is commonly used for grocery stores because of their perishable goods. LIFO would be something that you're kind of looking at, releasing newer models. So electronics would definitely use the LIFO method. And then other ones like average costing, right? A grocery store can use average costing, especially for any items that don't expire. So anything that's a non-perishable good, so such as household products, right? They don't have expiration dates. So those ones can be used average costing. Or for instance, water, right? I used water for my example in the class because water is a necessity. Not water, it is something that you constantly are making purchases of and you're constantly selling because it's a resource that everyone uses. So instead of calculating which batch came first, right, water will always be a stable unit because no matter what it is, right, a company's going to have to produce a water supply. So on and so forth. Okay. So being understand like how that works, that's how it is calculated. Okay, and we got to take a look at how to use the inventory items and using it for invoicing. So we got to take an example of how we can apply items and use it in towards this. Okay. So now that we've done that, the next thing is if you want to take a look at how to create transaction journals, again, it's more or less just running a report on your transactions. You'd be able to find it actually on the sales form itself. So in this case, the book does say that if you go to create invoices or sales receipts, there you go. I double clicked it twice. And let's say I go back to my previous one, right? If I go back to my previous one, which is my Jerry Perez, right? I can go to the very, 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 very top and I can go up to the little menu bar here. And I believe it's under reports. And if you click on this, it's supposed to give you a drop-down menu. I don't know why it's not giving me a drop-down menu. You should be able to see your transaction. Oh, right here. View transaction journal. Yeah. Sorry, I didn't notice that it changed the icons. Okay, so when you click on the reports, you can view your transaction journal. Again, it's a very small thing. Again, you can run this report on any given time. So this is just pretty much saying if you run a report on Jerry Perez itself, you can do that in the customer center, right? You can run a report on them. That's the same thing here. You can run a transaction journal if you'd like. Okay, so that's just a little piece of information that could be useful to you. But again, you can do the same thing by going to the customer center and running the reports on that customer. You see a list of all their transactions. So that's just a small section there. Any questions so far?
I don't think so.
Okay, if you want to set a reminder, so when we talked about that little instance about setting reminders on for inventory to remind you to make purchases of your inventory, you could do that this way. You can just go ahead and read that. Pretty straightforward. You're going to go to your reminders list and you're just going to activate it. That's Not hard, okay?
No, it's either, yeah, you either do it or don't. So
Exactly, okay?
it's not bad.
Pretty straightforward. All right, so I'm going to actually talk briefly about this, and what's going to happen is I'm going to do the first example, and then we'll go ahead and take a break. So,
Oh, okay.
purchasing inventory. Purchasing inventory is pretty straightforward. You only have two options, right? And this is what I was going to talk to you about. You can make purchases of inventory either by going to the store and actually making the purchase and paying at time of service, or you can go ahead and use the purchase orders little tab here to enter in your inventory. So I'm going to go ahead and take a look and explore both options so then you know how to do both. So the first one is going to be taking a look at writing a manual check and entering the item by using your write a checks window. So it says right here, do not do, but you know what? This is class purposes. You should be able to do it as well. Okay. So let's go ahead and take a look at this example. So they want you to create a or write a check to Mr. Wong and Son. Okay. And what we're going to be doing is we are going to be purchasing 5 camera lenses. Okay. So let's go ahead and write myself a check. So I went to their store and I decided to pay at time of purchase, right? So in this case, oh, I just hit the wrong one. I hit checking, not write a check. Excuse me. So write a check. All right. Make sure first thing that we're going to do is that it's coming out of our checking account. Good. The date is also going to be the same, February 7th. Check number 330. Okay, good. And now what is the check amount for? Now, of course, I'm going to go ahead and fill in my information one at a time. I'm making a purchase at Mr. Wong and Son store. Okay. And I'm going to make purchase. I'm going to write in my memo, purchase 5 lenses. Okay, so maybe I went to the store because I'm afraid that if they ship it to me, it's gonna break. Or second of all, or maybe I just want to see what kind of camera lenses for which kind of models they have for certain cameras. Whatever it is, or maybe I want to, test it out at the store. Whatever it is, right? So you could sell it out to other people. So what you're gonna do here is notice this. I have either expenses or items. Expenses are for accounts only. Okay? Make sure you know this. Expenses are for accounts only. But I'm not looking for an account. I'm looking for items. So if I click on this tab right here, I want items. Then it's going to populate items for you. So in this case, because I do have lenses as one of my items that I sell or that I make purchases of, I'm going to go ahead and select it. And it's going to fill in all the information. In quantity, I want 5 of them. Okay? So in this case, there's my total. And because this item is going to be tax exempt because Mr. Wong and Son is a vendor, right? I'm going to go ahead and move forth. I'm not going to get taxed for this. He's going to tax exempt me because I'm a legitimate retail store. All right. Also, I need to associate this is going to be for the Walnut Creek location. Important that you associate which stores you're making purchases for. All right. In this case, I am done. And notice this, I purchased 5 lenses, right? I placed it under items. I'm going to go ahead and click save and close. And I'm paying at time of service. All right, now what does this say? This says, problem. Other check already has been used. Oh, okay, because in the book it says to use 330. I guess I'm going to use 331. And I'm going to go save and close. There you go. I got the beep of approval. Now let's go ahead and check that stock status one more time. So if I go all the way up to the top, okay, I go run my report, inventory, inventory stock status by item. I click that. Notice this, now my lenses is now increased to 12. So I actually had 7 of them available and I end up buying 5 more. Okay, so there you go. Yep. So there it is. So make sure you know this because so that's how you make purchases of inventory manually. So because I did it manually, right, I had to use the item, right, and I used a write a checks window. But I can also manually punch it in through when I update, when I adjust my inventory. And we'll talk about that, I think, 2 sections after the purchase orders, okay? So any questions so far? So that's actually writing a manual check when you are at the vendor's location, you're making a purchase of inventory. That's how you update your inventory. Okay? So right now it is 2:55. I'm going to go ahead and give you a 15-minute break. So be back no later than 3:10. Okay?
Okay.
All right, and we'll continue from there.